Well, let's now turn to tariffs and, of course, the impact it's having across markets. Now, South Africa's rand slumped to its weakest level in about 18 months on Monday. While, of course, we also saw local stocks plunging before staging a recovery. And that is as U.S. President Donald Trump's sweeping tariffs and global recession fears rocked financial markets today. Now, the rand traded at around 0.58 against the dollar. That's down about 2.4% from Friday's close. It is also the weakest since October 2023. Now, of course, Trump shows no sign of backing away from those tariff plans. And investors worldwide poured into safe haven currencies like the yen and the Swiss franc on Monday. Well, let's discuss what's happening over in South Africa. We're now joined by Sumitra Naidu. Sumitra, great to have you with us. Give us some more insight into the scale of the market rout across South Africa's markets today.
Yes, Uche. Well, South African markets took their cue from Asia this morning, falling sharply at the open. The JSE All-Share Index lost about 5% at one stage, dropping below that key 80,000 point level. We haven't seen this kind of weakness in about 5 years since COVID. But it later turned into a rather topsy-turvy day. The market suddenly started regaining ground early in the afternoon, paired losses. And that was apparently after media reports suggested that Trump was going to issue a 3-month reprieve on raising tariffs. Now, that turned out to be fake news. But the JSE managed to regain some of its losses and ended the day just over 0.75% higher in the day, back above that 80,000 point level. A very weird day on the market, at least on South African markets. So the rand still on the back foot, weakening to its worst level in 18 months. As you said, the currency now at hovering around 19.50 against the dollar, also weakening against the pound and the euro. In fact, it was the worst emerging market currency after the Mexican peso. Uche?
Well, let's talk about what's moving investors right now, because not only are investors in South Africa, of course, shaken by these tariffs, there's also political uncertainty, which has become a concern. What are the key issues that are driving investor sentiment right now?
So, Uche, it's a bit of a double whammy for South Africa. So there's still plenty of concern in the market regarding President Trump's tariffs. South Africa getting hit with a 30% hike on all goods to the U.S. The pain will be felt. Investors are very concerned that the tariffs on a host of countries could actually cause a global recession. And while that is weighing heavily on the local markets, we also have local politics that's also worrying investors. So the JSE lost over 3% last week after the government of national unity showed signs of collapsing. We saw this playing out in the markets after the elections last year, when the ANC lost its majority and needed to form a coalition. Now, once the GNU was formed, the main opposition DA, the Democratic Alliance, markets turned positive, and this worked for investors. They felt it would help South Africa. But investors getting anxious again last week after the budget was passed in Parliament without the support of the Democratic Alliance. So it's still not clear whether this coalition is actually going to continue with the Democratic Alliance or not. We don't know if this GNU is actually going to work, and that's really spooking the markets. So South African markets having to deal with issues at home and abroad. It's not a good time for South Africa at the moment. Uche?
Now, we did see some big names losing on the JSE today. Naspers was down, Anglo-American, Richmond. Give us a sense of what sectors and companies in South Africa now have been hardest hit by, of course, these tariff worries and also local issues.
Yeah, that's right. I mean, Naspers getting hit because of its stake in the Chinese company Tencent. But that was pretty much how the markets fared today. And as I said, a very topsy-turvy day, but the impact across the markets will be felt in the auto and agricultural sectors. South Africa is a big manufacturer of vehicles and exports mostly to the US. We are also a big exporter of fruit. South Africa is the second largest exporter in the world of citrus fruit. And there's over 1,000 other goods duty-free that's being sent to the US, and that's of course listed under AGOA, and that's likely to go soon. So we're seeing the impact of most of these companies that are producing these goods. The retailers also starting to feel the pain just when They started bouncing back on better spending patterns in South Africa, lower interest rates, and we also had retirement savings benefits coming through last year, and that's helped to boost the economy somewhat. There's now concerns that this weaker rand could push up inflation once again. It could also push out interest rate cuts, which we were expecting. We just had one MPC meeting 2 weeks ago, and the Reserve Bank decided to keep rates unchanged because of all of this uncertainty. They also did scenario planning around what it would mean for South Africa should we lose AGOA. And that showed that we would lose 0.7% on growth. And if you look at where South Africa is, I mean, losing 0.7% growth, and you compare it to just make a GDP coming in at 0.6% for the whole of 2024, it just does not look good for us. On the upside, we did see on the markets today, the miners, of course, doing very well on the back of the weaker rand, which will help with overall revenues to the economy. But continued weakness in this rand won't be good for inflation. There's also concerns that this trade war will cause a global supply crisis. Uche?